Now we're going to go over to our man, Mr. Chris Gaffney. Chris, folks, you've heard him many times here at TFNN. He's the president of EverBank World Markets. Now, as you come over to our website at TFNN, you're going to see the banner right on the side, EverBank. You hit that banner, and what you're going to see there is that we put the money in money markets. Chris Gaffney, welcome back to TFNN.
Glad to be here.
Totally. So tell us about this special yield pledge money market offer.
Yeah, we've got a special offer to put out there to your listeners. We will pay them for bringing in deposits to EverBank, and not only are we going to give them a great rate, but we're going to actually put an additional deposit into their accounts if they after they deposit that money and keep it here through March of next year. So first of all, we pay a fantastic rate on the money while it's here. The yield pledge money markets right now have a 6-month bonus rate of 1.6% on the first $150,000,
which is amazing.
That equates to a 1-year APY of 1.11.
Right, which is just absolutely amazing. Just to give you a context of what that is, folks, is that, you know, the Treasury market, a 2-year Treasury that you're in and you can't get money back out, only pays 0.9%. So yeah, we're at 1.6%. And never mind the CD or the money market. Yes, I'm sorry. Go ahead, Chris.
Yeah, and it's liquid money.
Right.
And then in addition, after you keep that in, and really the key to the offer that we're putting out there for you is that if you, depending, it's a tiered structure, so depending on how much money you put into that account, we're going to pay you anywhere from $25 up to $500 in addition to the deposit that you put in. So it's free money.
That's a whole different ballgame. Okay, so if you go through this, folks, we have two basically principles inside here. The first one is that the first 6 months you're going to get paid 1.6% as a bonus interest rate. Then on top of that, if I'm hearing this correctly, and I'm reading this on the website, and I believe this is how it is, anything from $10,000 up to $24,900, you're going to get an extra $25. $25,000 to $49, $50, $50 to $74, $100. 75 to 199, 175, and then over 200, you get an additional $500. You know what's so cool here, Chris? And folks, as you're looking at this is not something that let's picture that whatever bank you're at right now. The bottom line is that we all know that, you know, we're not getting any interest. So you can transfer your account to this money market account because a money market, this is liquid, just as Chris says. It'd be better if you don't take it out the first 6 months, but you can take it out, you can use it, and make more money. You know, it's pretty cool how you set this up, man. So let me ask you, like when you guys sit around and think about all these creative things that you guys do at EverBank, right? That must get exciting, right?
Oh, it is. It's a great place to work. You know, we try to stay on the cutting edge of products and really try to come up with ideas and products that really help our clients, help the consumers to meet their goals. And this, again, you know, there's just not a lot of places where you can get yield right now in a safe investment. And this is an FDIC insured bank account. So, you know, it's an investment of U.S. dollars. If you have money sitting in your local bank, chances are it's not earning anywhere near the interest rate that we're going to pay you on this account. And even after that first 6 months, you know, we've got that bonus rate. Even after that, these accounts have what we call our yield pledge, which is a pledge from us that we're going to keep this account yield in the top 5% of our competitors.
Yeah, which is absolutely huge. Now, folks, you have until December 31st, okay? But, you know, why wait, okay? In order to open this account, you can give them a call at 855-750-4051. And the cool thing here is this, is that you know, today, okay, folks, we are promoting this special yield pledge money market account. But you got to remember something. EverBank itself is a huge bank. They have a lot of different products. Try them. You know, what's so cool about your bank, Chris, okay, is that, you know, listen, you know, we deal, of course, you know, in the gold market and the currency market and all that. But I think folks really should know too that guess what? You can get mortgages. I mean, they can get a lot of different products, and once they get, you know, that account up and going, they can look around there.
Absolutely, and that's, you know, I sit on the currency and metals desk, so a lot of times I'll join you and we'll talk a lot about the currencies or the metals or our market safe products. But you know, this is just another way that investors can take advantage of our low-cost structure. You know, without having those branches to support, we're able to pay a better interest rate and come up with products like these where you know, that benefit the clients and the listeners with higher interest rates and, like I said, free money for opening an account.
And I know, because it's so cool, because the business structure that you have at EverBank is that the expense ratio, folks, what Chris is saying, is so much less. So bottom line is that when the expense ratio is less, guess what? The client gets a better deal. And in a competitive atmosphere, thank God we have in the United States, that's what it's all about, which is really cool, right? Do you know what I mean?
Yeah.
And so, hey, I want to switch gears on you for a second, right? Because I know I'm gonna have to have you right back next week, because the Fed, when we talk currencies, oh man, next week this market, you know, has been volatile, but you know, next Wednesday, right? That's kind of D-Day, or that's
it. Yeah, and you know, I think we priced in a rate increase after that last jobs report. You know, yes. The market seems to have priced in, especially on the dollar, seems to have priced in that next interest, you know, that initial interest rate increase. But what everybody's worried about now is when the next one's coming. Yes. And you know, that's the problem the Fed's going to run into is, you know, if and when they go ahead and raise next week, then the focus is going to shift to the next one and what happens there. And it certainly looks like, you know, the Fed is going on a path on their own. I mean, the ECB continues to add to liquidity and to lower rates, and in fact negative rates. You know, we saw the Bank of New Zealand cut rates today or last night, and so we've got a lot of central banks around the globe cutting rates or looking to keep rates very low. So if the Fed does start raising rates and continues down that path, this dollar could see even more strength. And unfortunately, I don't think it's good news for, you know, certainly for the currencies. And commodity-wise, you know, what's gotten into oil?
I know. Let me tell you, man. Chris, I'm trying to twist my head around, like, the rest of the world's going down on rates. I mean, if they really go up, it's going to be like, you know, like, oh my God, what is going to happen, right? It's like, wild. Folks, this is the phone number, 855-750-4051. You can come over to TFNN and hit the EverBank banner too. Chris, you have a great night, safe night, and look forward to having you back next week, okay?
Always like talking to you.
Awesome, man. Have a great one. Have a safe one. Stay right there, folks. We're coming right back.